Today's theme is the bear market rally is dead. Long live the bear market. The question everyone's been trying to answer these past few months is whether the mid-June lows represented the end of the bear market in equities and whether we have truly now embarked on a new bull market. A legitimate question, since the revival off the lows ended up recouping more than 50% of the bear market decline of nearly 25%. And legend has it that the stock market has never before gone on to retest the lows under such a technical condition, to which I say, not so fast. A few things to consider as a rebuttal. First, recession bear markets only end in the mature stages of the recession when investors begin to see the whites of the eyes of the economic recovery. Meanwhile, whether or not the back-to-back contractions in real GDP in the first and second quarters did represent an official recession or not is certainly up for debate. But what isn't up for debate is that through July, the Conference Board's leading economic indicator fell for a fifth straight month, and that is an ironclad message of recession by the end of this year. Second, a recession bear market only ends after the Fed eases policy so aggressively that the yield curve re-steepens, and at the market lows, the 2s10s Treasury curve is positively sloped by 140 basis points both on an average and a median basis. All we know at the current time is that this Fed is still hell-bent on raising rates into an inverted yield curve. So it's really next to impossible to view the situation as anything but a classic short-covering, momentum-based bear market rally. Third, we have to consider what happens to the P multiple and corporate earnings through a classic recession, and history would suggest that the mid-June lows will not only be tested but will be violated, and the best buying opportunity to go long for good will be closer to 3,000 on the S&P 500 than 3,600 and change that we saw in the middle of June. You can trade bear market rallies, but you can't own them, so my advice is to be patient, disciplined, and wait for two things to happen. A re-steepening in the yield curve, which requires a shift in Fed policy because not fighting the Fed works in both directions. And I recommend waiting for validation from the relative strength index of the financials, which throughout this entire 2-month rally never once flashed the green light. We get a positively sloped yield curve, and we get the RSI for the financials do more than bounce along the bottom, and you'll find this bear leave the cave and enter the bull ring. Stay tuned.